Hey everyone, it's Julie here with TipRanks, and today we're taking a look at some top analyst tech stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 tech stocks that have recently picked up buy ratings from some of the very best ranked analysts in the tech sector. We're going to take a look at these companies, what it is that they do, what those top analysts have to say, and whether the rest of Wall Street agrees. We found these companies over on the top experts page on TipRanks. With TipRanks star ranking, we rank over 9,000 Wall Street experts based on their success rate, average return, and statistical significance. Under the top Wall Street analysts here, we narrowed down our sector to technology and then went into the profiles of some of these top-ranked analysts here to see their latest stock coverage. Just before we get into today's tech stocks, this is a friendly reminder that if you enjoyed the video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's jump right into our top analyst tech stocks. First on the list today is IMPINJ. They trade under the ticker PI, currently priced at $193 per share. Their stock is up 115% year to date and is up over 21% in the last 3 months, cooling down a little bit here in the last couple of weeks. They do score a 10 out of 10 on the TipRanks Smart Score, with increased insider activity, having purchased over $19 million worth of shares in the last 3 months, and some increased crowd wisdom, with the number of portfolios holding the stock increasing 15% in the last month. IMPINJ is a tech company that provides RAIN RFID solutions. Their radio frequency identification devices and software connect physical items to the cloud, allowing users to track, identify, locate, and authenticate items. Their solutions are used in a variety of industries, including retail, healthcare, food and beverage, manufacturing, hospitality, travel, and banking. With over 4 million readers deployed, they have over 100 billion items connected. They just shared their Q3 earnings report last week on October 23rd, where they did come out with both an earnings and revenue beat and strong future guidance. For their third quarter, they reported earnings per share of 56 cents, which beat expectations by 8 cents per share. Revenue came in at $95.2 million, which did grow 46% year over year and beat estimates by about $2.3 million. Looking ahead, they're anticipating revenue of $91 to $94 million, with the midpoint being above analyst consensus. They said that their third quarter results were strong, with revenue and profitability well above their guidance, and that they remain confident in their market position and are energized by the opportunities ahead. IMPINJ recently picked up a buy rating from Mark Lipicus of Evercore. He is currently the top-ranked tech analyst and is ranked number 2 out of over 9,000 analysts on Wall Street. He said that the firm does expect some near-term weakness as the company's Q1 outlook is slightly below their estimates, and that translates to some decelerating revenue growth into the first half of fiscal 2025. However, the firm does believe that the industry is hitting a knee in the adoption curve, driven in large part by customers like Walmart conditioning the supply chain to embed tags in their products, making it easier for other general merchandising giants to ramp their RAIN RFID into their businesses, and the firm expects more large customer announcements in 2025. The stock does just have 5 current analyst ratings, but all of those ratings come from 5-star analysts, and they all rate the stock a buy. And the average price target comes in at $252, implying an upside potential of 30%. Looking at those ratings down below, we can see our top analyst here increased his price target to $270 for an upside of 39%, which is our high-end price target, while the low end is Piper Sandler at $235, still with an upside of 21%. Second on our list today is Lam Research. They trade under the ticker LRCX, currently priced just shy of $77 per share. Over the past 1 year, the stock has climbed 32%, though is in the red recently, dropping 16% in the last 3 months. They do currently score an 8 out of 10 on the TipRanks Smart Score, with bullish sentiment and very positive crowd wisdom. Lam Research is one of the world's largest manufacturers of semiconductor wafer fabrication equipment. They create equipment for semiconductor manufacturing, including thin film deposition, plasma etch, photoresist strip, and wafer cleaning processes, allowing chip makers to build smaller, faster, more powerful, and more power-efficient electronic devices. Their equipment is used to create transistors, interconnects, advanced memory and packaging structures, and is used in related markets like MEMS and LEDs. They also shared their latest quarterly report last week on October 23rd, and for their first quarter came out with both an earnings and revenue beat. They reported Q1 earnings per share of 86 cents, beating expectations by 5 cents per share, while revenue came in at $4.17 billion, beating by $110 million and growing nearly 20% year-over-year. Top analyst Mark Lipicus did rate the stock a buy, but so did Craig Ellis from B. Riley Financial, who is in the top 10% of Wall Street analysts. He said that their Q1 results were solidly better than expectations, and Q2 sales guidance was ahead of the consensus, with the tone that DRAM, leading-edge foundry, and advanced logic demand is strong and has numerous inflection tailwinds in 2025. They believe current levels sustain a buy-the-dip opportunity into an expected solid calendar 2025 wafer fabrication equipment growth. Lam Research does have 20 current analyst ratings, though thoughts are a bit more divided. It comes in as a strong buy, but with 15 buys and 5 holds. The average price target comes in just above $99 per share for an upside potential of over 28%. Looking at those recent ratings down below, on the low end we do have a hold rating here from Morgan Stanley with a slight downside just over 1%. Our high end price target is B. Riley Financial at 110 for an upside of over 42%. If you've made it to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Our last stock here that has been picking up ratings from top analysts is ON Semiconductor. They trade under the ticker ON, or ON, currently priced at $74 per share. Overall, they are up 18% in the past year, but you can see they have had some volatility. In the last 3 months, they are down over 5%, but have recently turned to the green. ON Semiconductor is, shockingly, a semiconductor company. ON Semiconductor is a designer, manufacturer, and supplier of semiconductor products and solutions. They focus on automotive and industrial end markets. The company is accelerating change in megatrends such as vehicle electrification and safety, sustainable energy grids, industrial automation, and 5G and cloud infrastructure. With a highly differentiated and innovative product portfolio, they create intelligent power and sensing technologies that help solve the world's most complex challenges and lead the way for a cleaner, safer, and smarter world. And with us being in the thick of earnings season, just like the other companies that did recently share a quarterly report, theirs came out just 2 days ago. We saw an earnings and revenue beat, but their fourth quarter outlook did fall a bit short. For their third quarter, they reported earnings per share of 99 cents, beating estimates by 2 cents per share, and revenue came in at $1.76 billion, just slightly beating estimates by $10 million. However, that figure did fall 19% year over year. Looking forward, they're anticipating revenue for the fourth quarter to be $1.7 to $1.8 billion and gross margin between 43.9 to 45.9%. Plenty of top analysts weighing in on the ON Semiconductor stock. We did hear from Mark Lipicus at Evercore, Craig Ellis at B. Riley, and also William Stein from Truist Financial. He is currently ranked number 6 out of over 9,000 Wall Street analysts. He rates the stock a buy, but did slightly lower his price target, saying that they guided their Q4 a hair below consensus and gave a mix of updates that are unlikely to change opinions. ON Semiconductor still appears poised to deliver double-digit earnings per share growth through a cycle, and shares are far cheaper than similar analog semi assets. Analysts' opinion is a bit more divided on this stock. It does come in as a moderate buy based on 19 current ratings, with 12 buys, 6 holds, and 1 sell. The average price target of $87 would imply an upside potential of about 18%. Looking down below, you can see all those top analysts here reiterating their buy ratings, with price targets ranging from 20% to 44% upside, and that 44% is our high-end price target. And not surprisingly, our sell rating here from Morgan Stanley is the low-end price target with a downside of 13.5%. So that is a quick look at 3 tech stocks that have all picked up a buy rating from some top-ranked analysts lately. Let me know your thoughts on these companies and which one catches your eye the most. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at, so make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.